Okay, so we're going to be looking at this Simple 30 trading system.
Okay.
And it's from sleekopgens.com.
Mm-hmm.
And we got some documentation from you guys about it.
Yeah.
And the thing that really kind of jumped out at me at first was just this two-account approach.
Yeah.
You know what I mean? Like
it is an interesting setup.
Yeah.
You know, from what I see, it's all about kind of creating that separation between your core capital and then the profits that you generate from that.
Right. And it's almost like
which can be a huge.
Yeah, it's like having these different lanes
Yeah.
for your money,
Yeah.
you know, and
Exactly.
with different sets of rules for each lane.
Yeah.
And, you know, they make it clear up front
Yep.
that, you know, this is a framework.
Yeah.
It's not some kind of magic bullet.
Yeah.
You know, it's about understanding the principles and then adapting those to your own trading style.
Yeah, and that's exactly right. Like, no system is going to predict the market perfectly. But what this does is it provides a really strong structure for navigating those uncertainties.
Right.
And I think that's really one of the big things that people struggle with is just that discipline and that kind of thinking for the long term. So
Right. Well, let's dive into the capital account rules first,
Mm-hmm.
you know, because that's kind of where this whole thing begins.
Yeah.
And, you know, rule number one, they set the tone right away.
Yeah.
It's like never risk more than 2 to 4% of your account on any single trade.
It's like laying the foundation for your house.
Yeah.
Yeah.
You know, I mean, it's like that solid base.
Yeah. Yeah, and it's thinking about each one of those as a brick.
Right.
You know, that you're carefully measuring it out, making sure that even if one doesn't hold, the whole structure is still good.
That's a great analogy.
Yeah.
And then, you know, you move into rule number 2,
Mm-hmm.
which limits you to trading just 3 to 5 symbols at a time.
Yeah.
Now, this might seem counterintuitive at first.
Yeah.
But I think there's some logic to it.
Yeah.
So what do you think?
Yeah, I think, you know, it's all about going deep, not wide.
Right.
Instead of spreading your attention, you know, super thin across just tons of different markets.
Right.
You're really trying to, you know, just become intimately familiar with just a select few.
Right.
Which allows for, you know, much more focused approach.
Okay.
You know, so you can really start to, you know, spot those patterns, react more effectively to their nuances.
Yeah. And I imagine that kind of reduces that feeling of being overwhelmed.
Absolutely.
You know, which I know a lot of new traders struggle with.
Yeah. Yeah, it's about choosing quality over quantity.
Right.
You're trying to, you know, hone in on your expertise.
Mm-hmm.
You're not just chasing everything that pops up.
Okay. And then rule number 3 kind of builds on that focus.
Yeah.
You know, it's like, okay, one active position at a time.
Yeah.
It's like we're not going to overextend ourselves.
No.
You know, we're dedicating our attention and our analysis.
Yeah. Be like a chef. You know, preparing one dish at a time, meticulously, you know, making sure each ingredient is perfect.
Right.
All the seasonings right. And that, you know, that's your informed decision making.
Okay, now rule number 4. This is where things start to get really interesting.
Yeah.
You know, this is the 2-lot entry.
Right.
You know, the starter lot and then the accumulation lot.
Yeah.
I'm curious to hear your take on this.
Well, so it's, you know, it's a way to scale into a position strategically rather than just going all in at once.
Great.
So, you know, let's say you identify, you know, promising setup and you enter with your starter lot.
Yeah.
And then all of a sudden, you know, it moves against you.
Right.
Instead of panicking, you have a plan in place.
Right.
Which is the accumulation lot.
Okay.
Which allows you to potentially lower your average cost.
Right.
Which then turns a potential loss into a much more manageable situation.
So it's like having a built-in safety net.
Yeah.
You know, but one that's rooted in a calculated approach.
Yeah.
Not just an emotional reaction.
Exactly.
You know, and I can see how this would be really valuable
Yeah.
for someone new to trading.
Absolutely.
Because, you know, it helps mitigate
Yeah.
some of those early jitters.
You bet.
And kind of instill a sense of discipline.
Yeah. And I think that's huge when you're first starting out.
Right.
Is just to realize that you can be wrong.
Mm-hmm.
And that's okay.
And that's okay.
Yeah.
And then we move on to rule number 5.
Yeah.
Which, you know, addresses this whole idea of locking in profits.
Right.
And this system advocates taking profits when you're up 30 to 40%.
Yeah.
Which is, it's a constant reminder that slow and steady wins the race.
Well, and I think it's also just a profound psychological impact because when you take profits, it it reinforces that positive behavior.
Right.
And it creates that sense of accomplishment that you're doing the right thing. Right.
And I think that's huge.
It's like acknowledging those small victories along the way.
You got it.
Okay, so now rule number 6. This might seem a little bit technical at first glance.
Okay.
Avoid options that expire within 5 days.
Mm.
What's the reasoning behind that?
Well, it's all about managing time decay.
Right.
Which is, that silent killer for options traders.
Right.
Especially, those who are focused on the shorter term.
Right.
As an option approaches its expiration date, its value just erodes so rapidly that it's much harder to profit from it.
Right.
So it's encouraging you to, really just stay away from those last minute, time crunches.
Okay.
And focus on setups that have a little bit more breathing room.
So it's not just about picking the right direction. It's about picking the right time frame.
Exactly.
Okay.
Timing is everything.
All right. So rule number 7. Now, this introduces the idea of profit distribution.
And this is where things I think get really interesting.
Yeah.
So how does this work?
Well, so once a trade reaches your initial investment level, you withdraw 20%. You retain another 20% in your capital account, and then you transfer the remaining 60% to the profit account.
So it's almost like this triple win scenario where you're rewarding yourself for your success.
You got it.
You're bolstering your capital base.
Yep.
And then you're fueling further growth in the profit account.
It's beautiful.
It really is. And I think, that 20% withdraw, that's a powerful psychological tool.
Oh, it is.
Because it's reminding you that this isn't just about numbers on a screen.
Exactly.
This is about tangible rewards for your hard work.
You got it.
So it makes the journey more enjoyable.
Absolutely.
It helps you stay focused on the bigger picture.
I love it.
I love it too.
It's great.
So, and then finally we get to rule number 8. And this one might seem a little bit stark at first.
Yeah.
Assume 100% loss.
Right.
On any trade that doesn't reach at least a 30% profit.
This rule is huge.
It is.
Because it's, one of the fundamental truths about trading.
Mm-hmm.
Losses are inevitable.
Right.
It's not about avoiding them. It's about accepting that they're going to happen.
Right.
And managing them.
Correct.
So I think that's one of the big things here.
Right. And by mentally preparing for that possibility of a loss.
Absolutely.
It kind of, detaches you from the emotion of it.
Right.
And helps you stick to your plan.
And your plan is going to get you where you want to go.
Right. And so it's like, you can't win every battle.
Nope.
But you can win the war.
You got it.
By minimizing those losses and maximizing your gains over time.
You got it.
So I think this really lays the groundwork.
It does.
For a solid trading foundation.
Absolutely.
The risk management, the discipline, the consistent profit taking.
You bet.
All of those seem to be the core principles guiding this capital account.
I think you're spot on there. And this is just the beginning.
Right.
We still have the profit account to go over.
I'm hooked. I can't wait to dive into that.
It gets even better.
Awesome.
I love it.
All right, let's take a quick break and we'll be right back.
It sounds good.
Okay, so we've laid this really solid foundation, with the capital account rules. But now I'm ready to kind of step into this profit account.
Okay.
It's almost like level 2 of this trading journey.
It is, and that feeling comes from that first rule.
Right.
Which is you can't even touch the profits in there to trade with until the profit account reaches 3% of your capital account balance.
Wow. So that's a pretty
buffer.
Yeah, it's a substantial buffer.
Yeah.
And I can see how that would take some patience to get there.
Yeah.
But at the same time, it really reinforces that idea of protecting those hard-earned gains.
It's like saying, hey, I've proven that I can do this.
Right.
I've proven that I can make consistent profits using these capital account rules.
Right.
Now, with this extra layer of protection,
right,
I'm ready to kind of go out on my own
right,
and explore some new opportunities.
And it really ties back into that psychological aspect.
Oh, absolutely.
That we were talking about earlier.
It does.
Because think about it.
Yeah.
You're removing that fear.
Yeah.
Of losing
weird.
Those initial profits.
Yeah.
It frees you up to experiment.
Right.
To refine your strategies, maybe even to take on some trades.
Yeah.
That have a little bit higher risk.
Sure.
Reward profile.
Yeah.
Knowing that your core capital is still protected.
That psychological freedom, I think, is just invaluable.
It really is.
Especially for someone who's maybe prone to, second guessing themselves.
Right. Or letting fear kind of creep into those decisions.
Exactly.
Yeah.
So it's about empowering you to become a more confident trader.
Okay.
And I think that confidence comes from knowing that you've followed a process
Right.
to get to this point.
Right. You've earned it.
Yeah.
Okay. So rule number 2 in the profit account.
Yeah.
It kind of echoes a principle from the capital account.
Okay.
No short-term options.
Yeah.
Expiring within 5 days.
Yeah.
So again, it's like, stay away from those
Yeah.
time decay traps.
Exactly.
Regardless of which account you're trading with.
That consistency is huge.
Right.
Because it reinforces that idea that, these principles, these sound trading principles apply across the board.
Right.
Whether you're using your initial capital or you're using profits,
It doesn't matter.
it doesn't matter. You still got to manage that.
Got to manage it.
Yeah.
Okay. And rule number 3, it maintains that focus on precision. It's like one active position at a time.
I love it.
No juggling multiple trades.
No.
Just laser focus on each setup.
It's about maintaining that discipline, that attention to detail
Right.
that brought you success in the capital account.
Right. And so rules 4 and 5. Now, this is where we get into this really interesting concept
Yeah.
of profit cycling.
Okay.
So walk me through how this works.
So this is a way to really bolster that capital base.
Okay.
So after your first successful trade in the profit account, you move 20% of those profits
Okay.
back to the capital account.
Okay.
The remaining 80% stays in there.
Okay.
You reinvest that.
Okay.
Then, after just 2 more successful trades,
Go.
the entire profit account balance
Wow.
gets cycled right back into the capital account.
So it's like creating this constant feedback loop,
It is.
of growth where your profits
Yeah.
are actively working to fuel even more profits.
That's the beauty of compounding.
Right.
By systematically moving those back to your capital account, you're increasing your trading power, allowing you to take on, potentially larger positions,
Right.
generate even greater returns over time.
It's brilliant.
It is a very cool system.
Yeah. And then it all kind of culminates in that final rule, which is repeat.
Yeah.
It's like the system is saying,
Trust the process.
trust the process.
Stay disciplined.
Stay disciplined.
And let it work.
Let it do its thing.
Yeah.
And we've talked a lot about the mechanics of the system, but I'm also really fascinated by this psychological underpinning.
Sure.
It's almost like they designed this system
Yeah.
to address those common emotional traps.
Well, one of the biggest hurdles for new traders is managing their emotions.
Of course.
Especially, fear and greed.
Right.
And the system tackles that head on.
Okay.
The strict risk management rules.
Right.
Act as that safeguard against those impulsive decisions.
Driven by fear.
Exactly. And then you've got the profit-taking rules, along with the separation of accounts.
Right.
That helps keep greed in check.
So it's like having this built-in coach,
It is.
guiding you toward rational decision-making.
Yeah, it's like having someone there to kind of slap you on the wrist when
Right.
you're about to
Exactly, yeah.
do something stupid.
And this 2-lot entry system
Yeah.
is a perfect example of that.
Yeah.
Because you start with a smaller starter lot.
Right.
Which mitigates the fear.
Right.
If the trade moves against you,
Yep.
you've got that plan in place
You got it.
with the accumulation lot.
You remove the emotion
Right.
from the equation.
You're not panicking.
Yep.
You're not making a rash decision.
You have a plan.
And on the flip side, the emphasis on consistent profit taking,
Yeah.
that 30 to 40% target, that prevents you from getting greedy.
Absolutely. Absolutely.
It's like, okay, we're going to lock in these gains.
Stay consistent.
We're going to appreciate the power of these small wins
You got it.
that compound over time.
Love it.
And let's not forget about those regular withdrawals.
Yeah.
That 20% that you get to pocket,
That's huge.
with each cycle.
Oh, yeah.
It's a tangible reward,
It is.
for your discipline.
It keeps you going.
It does. It keeps you motivated.
It makes it fun.
It does.
Yeah.
And so now, the document talks about
Yeah.
paper trading,
Mm-hmm.
as a way to kind of familiarize yourself with this system
Sure.
before you risk any real capital.
Yeah. Have you ever paper traded?
Oh, of course.
Yeah.
I mean, I think it's an invaluable tool,
Yeah.
especially for new traders,
Yeah.
because it allows you to test the waters,
Yeah.
experience those nuances of the system,
Right.
build some confidence without putting your hard-earned money at risk.
It's like a dress rehearsal
It really is.
for the real show.
And the fact that sleekapchens.com
Yeah.
actually provides those historical setups
Yeah, that's great.
for paper trading.
I love that.
Yeah, specifically with AEPL.
Yeah.
I think that's fantastic.
Yeah, it lets you, walk through it step by step.
Right.
See how the rules play out in real world scenarios.
It's like having a guided tour
Yeah.
of the system
Yeah.
in action.
Yeah.
You can see how those rules translate
Mm-hmm.
into those real-time trading decisions.
And I think it's a great way to bridge the gap between theory and practice.
Exactly.
Make those rookie mistakes
Right.
in a safe environment.
Right. In a consequence-free
Without any money
environment. Yeah,
on the line. Yeah.
exactly. And so, we've covered the rules.
Yep.
We've talked about the psychology,
Yep.
the importance of paper trading.
Yep. Yeah.
What resonates with you the most about this system?
I think the thing that really stands out to me
Yeah.
is its emphasis on both discipline
Okay.
and adaptability.
Okay.
So it's providing that strong framework,
Mm-hmm.
but it also encourages you to kind of personalize it
Right.
based on, your own risk tolerance, your trading style,
Yeah.
the market conditions.
So it's like having a roadmap,
Yeah,
but you get to choose the destination.
exactly. You got it.
Yeah.
Yeah.
I love that.
Yeah, it's a good one.
I love that analogy. And I'm also really intrigued
Yeah,
by those psychological aspects of it.
absolutely.
The way it addresses those emotional traps.
Yeah.
It encourages that mindset of patience and discipline.
Yeah. I mean, that's stuff that you can take,
Absolutely.
outside of trading
For sure. 100%. So,
and apply it to your life.
all right, we're going to take another quick break.
Okay.
And we'll be right back to wrap things up.
Sounds good.
So we've covered a lot of ground here.
We have.
With the Simple 30 system.
Mm-hmm.
But as with any framework,
Yeah.
I imagine there are nuances, to consider,
Sure.
potential challenges,
Yeah.
and maybe even, areas where you'd want to tweak the system
Yeah.
to fit your own style.
You're absolutely right.
Right.
No system is one size fits all.
Right.
And that's really, I think, where the learning begins.
Okay.
It's understanding not just the what, but the why behind those rules.
Yeah.
So you can really adapt them to your circumstances.
Okay. So for instance, we talked about
Yeah.
the strictness of some of the rules, like the
Yeah.
30 to 40% profit-taking target,
Yeah.
and well, that's great for instant on discipline.
Sure.
I could see how some traders,
Yeah.
especially those with more experience,
Yeah.
might feel a bit restricted.
That's a valid point.
Yeah.
Some traders are going to be more comfortable,
Right.
managing open positions,
Right.
riding winners for longer.
Right.
And that's okay.
Yeah.
The system isn't meant to be
Right.
like the 10 Commandments.
Right. It's not set in stone.
No,
Okay.
it's a framework.
Okay.
It's a foundation.
Right.
You can build upon that.
So it's more about understanding those core principles,
Yeah.
the risk management,
The discipline,
the discipline,
consistent profit take.
consistent profit taking. Yeah.
Yeah.
And then, applying them in a way
Yeah.
that aligns with your style
You got it.
and your risk tolerance.
Exactly.
Right.
So you might choose to adjust those profit-taking targets.
Right.
The number of symbols you're trading.
Right.
Even the two-lot entry system.
Okay.
The key is to really understand the reasoning behind each of those rules.
Okay.
And then say, okay, how can I personalize this?
Right. It's like having this toolbox filled with,
Yeah.
high quality instruments.
Yeah.
But, you don't need to use every tool for every job. But you've got the right equipment
You're prepared.
to tackle any situation.
Exactly. And remember, trading's a dynamic.
Right.
The markets change.
Constantly. Yeah.
You have to adapt.
Right.
What worked yesterday
Right.
might not work tomorrow.
And that's where the ongoing learning comes in.
You got it.
This reminds me of something you said earlier. Trading is a journey,
It is a journey.
not a destination.
It's not a sprint. It's a marathon.
Exactly.
Yeah.
Yeah.
Yep.
And this system can be that guide
It can be a fantastic guide.
for that journey.
Yeah.
But, ultimately, you're the captain of the ship.
You're in control.
You're in control.
Exactly. You got to stay informed.
Right.
Got to adjust your sails as the wind changes.
And I imagine, having a community
Yeah.
of like-minded traders can be so valuable
Oh, it's huge.
during that journey.
Yeah.
It's like having, your crew
Your crew
to support you,
to bounce ideas off
to
of.
bounce ideas off of. Yeah.
That's exactly. And they mention a forum.
On the sleekopHNS.com website.
On their website.
Yeah.
Where traders can connect.
Yeah.
I think that's a fantastic resource.
I do too.
You know, don't underestimate the power of learning from others.
Asking questions, yeah.
Asking questions.
Yeah.
Bouncing those ideas around.
And, it can help you stay accountable.
Oh, for sure.
To your plan, which is, one of the biggest challenges.
It's huge.
For any trader.
Absolutely.
It's like, we all have those moments.
We do.
Where emotions cloud our judgment.
Yeah.
And having that support system can make a world of difference.
I think that's a great point.
So as we kind of wrap up our deep dive into the Simple 30 system.
Okay.
I want to highlight some key takeaways for you.
All right, let's do it.
So first and foremost, this system is a testament to the power of these core principles. The risk management, disciplined execution, long-term mindset.
It's not about getting rich quick.
It's not about getting rich quick.
No, it's about, building that solid portfolio.
Right.
That can weather the storms.
Exactly.
And, produce consistent returns over time.
And second, I think these psychological aspects of the system are so valuable.
They are.
The way it addresses those emotional pitfalls and encourages that mindset of patience, discipline.
It's huge.
Continuous improvement.
It's mastering your emotions.
Yes.
Instead of letting your emotions master you.
It's so important.
It's all about, having a clear head.
Right.
When you're making those decisions.
Yeah, when things get a little crazy.
Exactly.
Don't
there. And finally, remember that this system is a starting point.
It is a starting point.
It's a foundation.
Yep.
And you can build upon that. You can build your own house on top of that foundation.
Exactly.
Yeah. Yeah.
So don't be afraid to experiment.
Right.
Adapt the rules
to
your style. Continuously refine your strategy.
Yeah.
Based on your experiences.
That's how we learn.
And the market.
That's how we grow.
Exactly.
Yep.
So embrace the journey.
Yeah.
Connect with that trading community. And never stop learning.
You got it.
The Simple 30 system can be a powerful guide.
It can.
But ultimately, your success is determined.
It's up to you.
By you.
Yeah.
Your commitment to growth.
To discipline.
And to that willingness to adapt and evolve.
I love it.
That's a great message to end on.
It is.
And so on that note, we're going to wrap up our deep dive into the Simple 30 trading system.
Sounds good.
We hope this exploration has been valuable for you.
Yeah.
And we encourage you to check out sleekopshans.com.
Absolutely.
To learn more.
And
until next time, happy trading.